With me today on the Agents to Owners podcast, I am so excited to have Carey Wallace with Agency Focus. Carrie is a business consultant working specifically with independent insurance agencies. She's an expert on mergers and acquisitions. And after working with Carrie, I can confirm that she's passionate about small business and truly wants us to win. Carrie, thank you so much for being on the show. Welcome.
Thank you, Brad. It's been a pleasure working with you, and I'm so excited that you invited me to be on your podcast. You're my first one of the year, by the way.
Oh, fantastic. Well, then I know you're raring and ready to go. First of
Yeah.
probably 100 is in demand as you are right now.
I don't know about that, but yes. Yeah.
So why don't you tell us a little bit about Carrie and how Agency Focus came to be?
Yeah. So, I've been in the industry for about 15 years. I've got two beautiful girls. My husband and I have been married almost 30 years now, which is crazy. Can you believe that?
Oh,
Like we're going to
wow.
celebrate our 30th wedding anniversary. We live in South Carolina. We relocated from Columbus, Ohio about a year and a half ago, which is the best move we ever made.
Correct.
Yeah. And so, same thing, about 2 years ago, I created Agency Focus, which is a consulting company that is solely focused on independent insurance agencies. I got a lot of my experience by working in an association as their CFO and also as their lead consultant. I then moved to their operations position and ultimately their innovations position. It was really, what is the value prop for agents? And we came up with two things. How can we help them transition their ownership better? And how can we leverage data the data that we have in order to help those agents grow? I took that across the country, really, and I've been able to help a lot of agents, but honestly, doing it on my own has been the best decision ever. The response has been incredible, and it's it shows. I love what I do, and I'm really excited that I get to be around people like you every single day.
Yeah. From the outside looking in, it looks like you are really just blowing up. Is that accurate? I mean, one, I see you all over the place. I see that you're constantly at shows and on podcasts, and I think there's such a need for someone like you in our industry. I'm wondering if you're getting close to a cap on what you can handle with your time.
It's great that you asked me that.
Yeah.
Actually, my team is now a team of 4.
Okay.
So while you just see me, I actually
Yeah.
have a team of people behind me that
Good.
help me do what I do, thankfully. But you're 100% right. Like we're a lean and mean team, but the whole idea is we'll probably be a team of 6 by the end of the year if we keep going on pace where we are. There's such a need in this industry, but I refuse to take on more clients than what we can handle. And so it's just about trying to really gauge that growth and grow with it. I do several things, like, that I do valuation planning, perpetuation planning. Lots of people reach out to me just to get their financials organized, which I love. That means they're planning and thinking about that. But I also do CFO services. So where I'm a fractional CFO to smaller agencies that don't need a full-time CFO. And I have a limit, like I will only take 10 clients, period.
Okay.
Until I know that I can serve them better and I have a team that can serve them the way that we need to. So yes, we are growing. And by having that team, it allows me to be out and speaking and actually continuing to do what I love and not have it suffer that I'm not able to serve my clients.
Yeah. And of course we connected because I had heard you on another podcast about evaluation, which I would strongly recommend this for really any agency that's been around for a while, is to develop a valuation on your business. You should really do that for any business.
Yeah.
But for me, the experience, it was so educational. And whether you don't necessarily have to be in a position, I don't believe, to want to sell. It's just a good idea to figure out what your business is worth. And I promise you that it is going to be an eye-opening educational experience, and your agency is going to be better because of that. I know ours is. So that's my little plug there for your valuation.
Well, I would agree, Brad. Actually, not only do you not have to be selling, if you're getting ready to sell and you wait till that time
Yeah,
frame, you can't actually do anything to change the value and to maximize the value of your
yeah,
agency. So I couldn't agree with you more. It's actually sad when someone comes and says, I have an offer in my hand. Can you value my agency? Sure, I can,
yeah.
but it is what it is at that point, you know?
Yeah, you don't have you don't have a chance then to change those expenses that you may, or to lean up, or to, I like to refer to it as, kind of detail that car before you sell it.
That's right.
You're selling when your car is, you know, is a little dirty. So I just made that up. So I hope it worked. So let's go back. I try to frame this podcast is, structured towards helping out scratch agents and newer agencies. So what are some good accounting practices that young agencies, or really any agency, should be employing from the very beginning?
So, number one, have your chart of accounts organized in a way that aligns with the industry benchmarks. So, when people like me talk about the benchmarks, you can easily apply it to your business. Meaning, take just a little bit of time and say, where am I going to allocate each of the expenses that I have throughout the year to the right category? So when someone says you should be spending 2.5% of your revenue on this expense, you've put all of those expenses in that category, and you know whether or not you're inside the benchmark, outside the benchmark, and that rail becomes meaningful to you. So number one, before you just start coding things anywhere, use a chart of accounts. We're in an industry that has industry benchmarks. Use them. And if you don't know how to do that, it takes less than probably an hour for someone to walk you through and really understand what those benchmarks are. So number one, do that. Number two, if you have any agency bill, learn what trust accounting is and have a separate account and a process around that. And do not let anyone receive money in your agency that does not understand trust accounting. It will save you so much time and energy down the road if you're super tight about that. If you do those two things, and look at your financials, like run monthly financials and look at them. And if you don't know what you're looking for, talk to someone like me and I'll tell you what you should be looking for, so you actually have a handle on what's happening. Don't wait till the end of the year to say, I'm going to look at these and I really don't know what they mean. If you did those three things, you'll run your business like a business and you're going to be better set up.
Yeah. Great advice. So what are some of those financial benchmarks specifically that we should be paying attention to?
So the biggest one, and I think for a scratch agency, for a while, it's going to be just you. And people want to know, like, how much do I allocate if I'm trying to build my infrastructure? What am I spending on technology? What am I spending on marketing? When do I get a facility? When do I hire my first person? So all of those are categories inside these benchmarks that you can utilize. So basically everything is shown as a percentage of your revenue. And as the agency grows, some of those percentages get smaller and smaller. But when you're first starting out, you might spend, a third on technology, marketing, and where you are, until you grow and build that book of business because you want to have the right infrastructure. Really, those benchmarks become really meaningful right around the time that your agency gets about, I'd say, 500,000 in revenue is where you start to even out, and those benchmarks make a lot of sense. But I would tell you, agents that are paying attention to how much do I allocate to my people? How much do I allocate towards technology? How much do I allocate towards my physical space? And what do I do for marketing? The rest, they're all expenses, but they are much smaller in comparison to the ones I just told you.
Yeah. What are some common mistakes you see agencies make? Common expense mistakes you see agencies make?
So number one, if you want to grow a business, and you run personal expenses through the agency, you aren't running it like a business, you're running it like a lifestyle agency, and you will not have the money to invest otherwise. So it's not that you can't do that, but do it in a way that you can isolate what those are and know exactly what your agency can perform at. Number one. The biggest is compensation. I
Yeah.
think when you're first starting out, putting a really rich producer compensation structure in place, for example, because they're starting from nothing, it's really difficult. And then adding a really rich compensation structure for a producer is tough to step back from. So most successful agencies that onboard a producer have some kind of small base so they can maintain themselves, and a stepped approach to getting them to full commission. And that's just a financial step you have to take as a business owner in order to get them to that compensation structure. But doing something like 70% new, at some point you're not going to be able to ever maintain 70% new, even though that's what they needed in the beginning.
Yeah.
Or have a structure that once it gets to this amount, it automatically goes to the 40/30 or 45/30 that it should. I think that's one of the biggest mistakes, is
Yeah.
locking yourself in and then losing talent because you
Yeah.
have to step away from it.
Yeah, and that kind of segues right into my next question for those younger agencies that are looking to add a producer for the first time. And you see that this is such a hot topic and debated topic, and of what factors should we consider for compensation and contract for a new producer?
Yeah, so I first and foremost, I think outlining to a new producer what they need to do in order to make the money they need. So have a schedule in there that said, if you are able to write X number of accounts each month of this size, it will translate to this dollar amount. And I will pay you some percentage for new, some percentage for renewal, and there will be a base in place for some period of time that will step down in order to get you where you need to go. Number one. Number two, there should be something about not taking the accounts and that the accounts are owned by the agency.
Mm,
100%. We just saw in the news that non-competes are questionable whether or not they're even going to stay, but be clear who owns the book of business. The last thing when I value an agency, I ask, are there any non-owned books of business in the agency? And the worst thing I see is there's a producer owned book of business. They own 20%. We own 80%. And my next question will be, great, which 20% do they own so I can remove those accounts? And they're like, oh, well, we don't get that specific about it. Well, then you don't know what you own as
yeah.
an agency owner. So be specific if there is an ownership. And I would strongly encourage you not to do that, because books of business move and shift over time.
Yeah.
So have the agency own it. And if you want to offer ownership, make it a small percentage of the overall agency that's tied to the size of book of business, not the actual book of business. We can talk, that's probably a whole podcast just about that, just so you
Yeah.
know. Yeah.
Yeah. No, but that's really excellent. And, as I ran into those the exact same issues where the agency that I took over, the contract was frankly not very clear, and the compensation package was way too high. And because I didn't act like a business owner until 7 years into my, agency ownership, that's going to cost me when it comes time to sell, and that's okay. That's okay. But these are things that can be corrected up front, and I think a large piece of that is don't try to do everything yourself. Outsource it. Use a consultant. Use an attorney to have have these things written. You're going to protect yourself, and you're going to benefit in the long run when it's time to sell this asset. So
Right.
I think that's great advice.
Yeah.
For those for those that are interested in acquiring another agency, what factors should we consider to make sure that we're prepared for that acquisition?
Well, first and foremost, I mean, you have to get your own house in order
Yeah.
before you bring other people and other books of business into your agency. So, um, I work with a lot of agencies that want to acquire. And first and foremost, we go over their book of business, their carrier mix, their staff. And the question is, what would actually enhance what you already have? And what would the ideal target look like? No one ever gets the perfect opportunity, but having an idea of what would enhance your agency is really important. So part of the valuation process is looking at your carrier mix, and the average agency should place 25% or less with their top lead three carriers. It could be 20. You should have three main lead carriers and then everything else that you place so you can maximize those relationships. If you look at your business that way, you could start to say, I'd love to target an agency that gets me to those identified three leads, and I can maximize those carrier relationships. My staff can be really well versed in those things. Same thing, your staff. Where are the weak points in your staff, and what would an acquisition from a talent perspective look like? Are you just enhancing the problem of your staffing or enhancing those weaknesses, or can it strengthen you? From a profitability, one of the buying powers is your own profitability in your agency. You add another book of business. What is the total profitability potential? So you have to look at that. Is it a book roll? Is it something that's really aligned with what you're doing? And different buyers can actually offer prices based on their situation and the combination of the agencies. So it's really important. Understand what's going to strengthen you and make you a preferred buyer in that situation versus someone else who might not be able to do that because they don't have the right makeup for that book of business, if that makes sense.
Yeah. What kind of indicators should we look for if we're trying to purchase another book or another agency from
So
that agency?
yeah, for sure. So there's lots of things. Number one, knowing what's important to you is really key. So you can use that as your guide. Number two, is the book of business actually transferable? Meaning, will it actually stay intact if you take it over, or will you have a lot of attrition due to the change in ownership, the change in the account manager? That's really important. What is the risk inside that book of business? Is it one huge large account and a lot of other little small ones? Is it 5 large accounts and many other small ones? Or is it a really well-rounded book of business where attrition won't feel as terrible than in one that has a really large account? So you got to understand the risk with the book of business. What's the risk with the loss ratio, and what will that do to your own loss ratio? There's a lot of things to consider.
Yeah.
But biggest one is, will the book of business stay in place? The other
Yeah.
thing is, if the book of business you're buying, does it have potential for someone else to be competing and trying to steal that book of business? So
Yeah.
why are they selling is important, is something I would also highlight. But those are the biggest things. Is it profitable? Is it transferable? And will it actually enhance what you're doing rather than exacerbate? Like, here's the thing. If you're an agency and you're heavy commercial lines, you might actually look for a personal lines book of business to round that out and be able to create some strength in that side of your agency. You might be heavy personal lines and want to buy commercial, so there's super cross-selling opportunities. The point is, you have to know your own book of business and know what to look for.
Yeah. So when you mentioned the profitability, which is important. So you're going to look at someone's P&L,
Yep.
right?
Yep.
And you're going to go down and what are some of those things that might scare us? Maybe an extremely high payroll amount, which or maybe they're tech, but I suppose if you're taking that ownership over, that's something that you can adjust into your own expense. what are some common mistakes that you see from agencies that make an acquisition?
I think they don't do the due diligence. They don't actually think it through the way that I just said. Like,
Yeah.
what does this actually do for my business? And the biggest thing is, I think people want to grow by acquisition. There is there's lots of benefits to growing by acquisition, and sometimes people fall in love with the idea of an acquisition, even though it's not a fit. And
Yeah.
they due diligence goes by the wayside, and they make the decision that may not actually be a strong business decision because they really like the idea of doing an acquisition. So that's probably the biggest
Yeah.
mistake. You asked me what would scare me on a P&L.
Yeah.
Not all expenses on the P&L are equal. And you actually hit the nail on the head. So I'm going to go right to, if I'm taking people with me in this acquisition, which is, by the way, the second most valuable thing. The book itself is valuable,
Yeah.
but the people are really valuable. I mean, it's incredible. And I'm going to look at their comp structures, and is it something that I can maintain, or will I have to change those comp structures? Because as soon as I have to change a compensation structure, that means I'm probably losing staff and losing talent, and I might lose accounts. So it's the biggest glaringly obvious thing. When compensation isn't right, it puts a red flag if someone's going to stay with the agency. Technology doesn't scare me, but it has to be a fit. So if the agency is growing and they are producing, and if they require a whole bunch of technology that I don't know how to use, I might actually not get the same results as the agency had, because we don't have the infrastructure to use that technology. So you need to be realistic about what you're able to do versus what your agency that you're acquiring. It's typically the other way around. That agency has never worked with technology. You have
Yes.
the technology and
Yes.
infrastructure. But my point is, it has to be a fit. It doesn't scare me. It just has to be a fit.
Which that's exactly one. I was just talking to a friend of mine recently, and she took over and an agency that's been around for a long time, they didn't have much for technology in their agency operation. Therefore, their staff didn't work with
Right.
much technology. So the merger of bringing these people in, then you're training, 4 new people on new technology, and it just didn't work.
Yep. Yep.
And I think that was something, that was missed, or there's so many moving parts, as you know, but that became a problem where, to your point, they had to get rid of some of those staff, and they're down. And so then you're dealing with this existing book of business that's used to dealing with Sarah and Lucy, and now Sarah and Lucy aren't there anymore, and they go into shock.
Yep. That's right. And you also paid for that talent. Like, that was
Yes.
part of what made you want that book of business in the first place, right?
Yeah. And I was talking to, I think, talking to another friend of mine who had an acquisition and probably didn't do the due diligence on the makeup of that book of business and how they operated. It was a more maybe more older school book of business that was accustomed to stopping in the office to making cash payments or whatever it was, and the acquirer, they didn't operate like that.
Yeah.
And it was a pain point, and it was a pain point of trying to get this customer base to operate and do business how the new owner wanted to do business. And it was a major problem with attrition, and it's really difficult to look at all areas, correct? I mean,
It is, Brad. And I think what's funny is you can do the check marks with loss ratio is good, carrier mix is good, customer mix is good, but the culture thing is hard.
yeah.
Like, go in and be in their existence, go to their agencies. If it's filled with filing cabinets and you are a digital agency, walk the other way,
Yeah.
because it's a big, big cultural shift. Like, you got to be realistic of what's going to happen. And sadly, you might overpay if you overlook those things that seem small, and not give it the right amount of Kate, importance in this whole thing, because they're still people. Your customers are people, your staff are people, and that change is difficult. Yeah.
When should we ask for a valuation, an independent valuation on this business? Is it always, or are there circumstances where it's not necessarily an agency you're buying? Maybe it's a one-person operation, and it's
Hmm.
a book with whatever you want to use, 1 million in premium, and is it something that we should always have valued?
Well, I always would, obviously, because I think too often I've seen people who don't go through a process overpay. And I've seen some people leave way too much money on the table and sell
Yeah.
their agency for far less than they should have. So here's my rule of thumb. If someone comes to me and they want to either buy an agency or they're thinking about selling, it depends on how much revenue they have, what process it would be. If it's over 500,000 in revenue, I would do a full evaluation, especially if people are involved with the transition. If people are going to stay, then the P&L makes sense and all of that. If it's under 500 and no people are going to be involved, I would do a book review where, again, an independent person takes a look at that and assesses the risk, really does a summary of what that is, and gives you a range of value that's a multiple of revenue, not a multiple of EBITDA. Sometimes when it's on the line, I actually provide both and say, here's what a reasonable P&L would look like. Here's what that makes. So on the line, meaning around the $500,000 in revenue, I might actually do a report that includes both. So it really depends on the situation, what you need. If it's a large agency and they're going to fold this book of business into theirs and use all of their technology and take maybe only the owner with it, doing a P&L doesn't make sense because their expenses are really on the buyer's side. Then I would work on that side to say, what exactly do I need in order to maintain that book of business? So
Yeah.
it's either a book review or evaluation, but unless you're an expert in buying agencies, I think it's a good idea to have someone look it over and give you some feedback so you don't make a decision that you regret.
Yeah. This is why I think that you fill such an important gap in our industry, because I don't think that there's many entities, attorneys, banks that truly understand the uh, uh, the insurance space, the independent insurance space.
Yeah, it's limited. It is limited. I mean, sadly, I've seen agreements say a price that was quoted in a multiple of premium. Could you imagine? Its premium isn't even something that's yours.
Yeah.
So they just didn't understand the language when they wrote that agreement. And, if someone held them to the letter of that agreement, it could be really detrimental. I
Yeah.
mean, you got to really want that price, right?
Right.
Yeah.
Let's pivot a little bit to perpetuation planning.
Okay.
So we have this, our small business is in a lot of cases, our largest asset.
Mhm.
And I've heard you say before that 92% of our agencies do not have a perpetuation plan, which is a huge number. When should we start a perpetuation plan in your view?
I actually think that every business should have something written down if
Yeah.
something happens to them. My business is 2 years old. I have a perpetuation plan. Like, you just have to.
Yeah.
The moment, here's what I would tell you, the rule of thumb from the National Association of Certified Valuation Analysts, that's the organization I'm part of. They say there's 3 criteria for having a perpetuation plan for any business. Number 1, that it has employees. Number 2, that it has repeatable income that happens over and over and over. And number 3, if it has complex processes. Think about any independent
Yeah.
insurance agency
Hello,
that
that's
you
us.
know. Yeah, like, it's literally you. You need to have it. And here's the reason why. Perpetuation means ongoing. It means, what do I need to ensure that this business will continue on without interruption? So you should have a plan. If something happens to a key person, to the owner, to a key relationship, what is the plan to keep the business going? And start from there. You said it best. It's almost like going through a process of doing a will. You
Yeah.
got to start with, okay, if something happens to me, what happens if I die? What happens if I become disabled? What happens if I this? Like in all those situations, the process may be different. But who would you trust to continue to step in for a period of time to either take over or to possibly buy or to get your business ready to sell? Because it's a valuable entity and you've got staff relying on you, you've got
Yeah.
customers relying on you. So it
Family.
is family, and probably most importantly, you have family that have no idea where to start.
No.
You really want to make sure you have some things documented and written down. Second thing is don't write it down and forget it. Revisit it as part
Yeah.
of an annual plan because things change. And I would, that's part of the reason people don't write it down is because they're afraid, they'll be held to something that maybe they forgot about 10 years. Well, don't do that then. If you're a business owner, make it part of your annual plan that you look at that and update it as it should be. But every business that has those three criteria should have a perpetuation plan in place.
Yeah. And that's, I mean, which we said, but that is our business, all three of those things.
Yeah.
So really we should all, I think it would be, well, very rare for somebody that's in the business for a year to say, what am I going to do with this book of business? But we should.
Yeah,
And start
definitely.
somewhere.
You should, because you work hard to build that book of business. It can't just have no plan. And the moment it has no plan, here's the other side to it. So let's say there is no plan. Someone's going to try and figure that out. So there was an agency in the Northeast. It was a single owner. He had one employee, but she had since retired. So he was operating this by himself. They had a handshake agreement with someone across town that they were going to buy the agency, and he died. It was in the middle of COVID. So it went to probate because there was absolutely no plan for this agency. It was difficult to get the carriers to talk to anybody who was licensed. So policies were coming up for renewal with no response.
Yeah.
Payments were sent in. Nobody had access to the banks. Like claims were happening with
Mess.
no response. What do you think happened to the value of that agency?
Could have went to zero.
It could have. The good news is the buying agency who was doing it as a favor, probably not even to the agency owner, but to his own family and family relationships, worked their own relationships with carriers to get around the probate to really service those clients. But it took months to figure out even how to price that transaction because they were losing business. They couldn't wrap their hands around what the business was. There was no plan. Nobody works their whole life to have everything that they've built go to nothing. Like that's a bad idea. And it happens more than you think. 3 of my clients in the last month were getting valuations and doing their planning because they had terminal diagnoses. And it's super sad to wait and do it then versus when you're healthy and it's another thing like monkey on your back at the
It's a
time that
huge
you
thing.
should. Yeah, exactly.
And
Yeah.
there's enough stress going on at that point, not to
Yeah.
mention probably not feeling great, maybe not in the right frame of mind.
Yeah.
And you're making a decision when you're forced to.
That's right. And
So,
it's super sad, I mean, anyway, if you plan ahead, all of that's in place. You can actually listen, you're going to still be dealing with something that's tragic, but at least your family's taken care of, your business is your staff is taken care of, your customers are taken care of, and what you built has value.
well, as we were talking a little bit beforehand, I do have a perpetuation plan, but now my goal is, and after I have this, detailed valuation, and I have so many other, I've researched the topic so much more. I've talked to other professionals. I'm so much more prepared now. Now I just need a detailed plan in place because really, I don't want my wife to have to deal with that should she have to. I want it spelled out. This is who you talk to. This is who you go to. They're going to take care of this.
Mhm.
So yeah, I'd recommend that for anybody, just like I would a will. It's the same thing. Um, Tell us what other services Agency Focus provides, because I know there's so many.
Yeah, so we started out just valuation and perpetuation planning. It was such a huge need, and it's really a great way to understand a business. But from that has really kind of out of necessity and out of demand from the clients that I work with. Many agencies are using me to create a projection for their agency and look forward and
Mhm.
actually plan and think about how they're going to plan their acquisitions, put a
Yeah.
strategy in place for that. So that kind of work becomes almost like having your own CFO.
Yeah.
So I have fractional CFO work that I do for a few clients where I am part of their team.
Yeah.
I have monthly engagements, quarterly engagements, and I help them build the strategy and honestly measure their success, or whether or not they need to adjust what they're doing based on that strategy that we put in place. So that's one. um, I definitely help if an agency is on the seller side, help them vet opportunities and really go through that process of what you were saying, like, how do I know if this is a good acquisition for me or not? So I definitely do that. um, we have done some also on the buyer side. If I have multiple offers, how do I actually discern which ones I should be thinking about? So I do some consulting in that area as well. So we have a pretty well-rounded, and I don't know, we actually have a downloadable budget form that we've had.
Mm.
I think every agency should have a budget. Like, how you do this without a plan, I think is just crazy. But that's how I'm wired. So we created a downloadable free budgeting form. And when like we put that out there, over 200 agencies have downloaded that. So we've helped a lot of those agencies build their budgets. And so some want to do it on their own, some want to reach out to us for some help. But I want to help people plan and just be as financially sound as they can possibly be.
So I just saw that budget the other day, which is right on your website, and I don't remember exactly which page, and it's real simple to get, right? You
Oh
basically
yeah, it's
put
just a
in your content.
downloadable thing. You just
Yeah.
download. Yeah, that's it.
I just think that there is such a giant need for what you have, especially for all agencies, really, but specifically for younger, not even necessarily the younger scratch agencies, because I could have used your consulting services when I just took over. I A big reason why I created this podcast, or the premise of this podcast was because of all the mistakes that I made along the way. It's true. It's and I hear so many other agency owners. Why? Because we came up to be as being insurance agents. We were technicians
Right,
and
right.
we were sales driven, and it was, oh, yeah, I should make some processes now that I'm 6 years in. You don't think of that. You think about getting that revenue in the door. And what I neglected so badly was the financial aspect of things. I had a bookkeeper, which, thank goodness that she was honest and loyal and had my best interest, because I neglected that area and she could have stole from me blindly. And I'm sure it happens all the time. So, so to have some services, or have, an outsourced professional to work off of, like I said, you fill so many gaps. Um, um, I think that your business is only going to continue to expand and explode, and I hope it does.
Thank you.
Um,
Yeah.
so, um, how can, if somebody wants to get in touch with you, what's the best way for them to reach out to you?
So you can definitely find me on LinkedIn. I would love it if they would go and connect with me on LinkedIn. I always share all kinds of resources and tips and
Yep.
everything for independent insurance agencies. My website is www.agency-focus.com. You can book time there with me. I do actually a 30-minute consultative call with anybody who reaches out to me, because it's always difficult to talk in a group or whatever. When I'm speaking, they'd ever want to raise their hand and ask me a
Yeah.
question. So they can do that. And then, believe it or not, I will be launching a podcast. Hope it's okay that I
Yes.
tell them that. Yeah.
Yes.
So
Go for it. What's the name of it?
it's called Insurance Refocused Podcast,
Mhm.
and super excited. It'll be out in February, and I'm actually doing that with my daughter, who joined the industry about a year ago, and we want to bring as many agent stories to light as well. And really, help people understand all the options that are out there and really learn from each other's experiences, just like you're doing with scratch agencies. I think there's a lot of stories to be told, and so many agents are willing to share them.
Yeah.
So, and I get to hear them. So now I want to actually give them, show them the light of day for other agents to hear them as well.
Yeah, well, no doubt it's going to be a huge success,
Well, thank you.
and it'll be a great platform for us to learn, more about what you do and the financial side of the industry, which is so important as being a well-rounded business owner, which is what the goal of what all of us should really be. So,
Absolutely. Yep.
Carrie, thank you so much for your time. I'm going to go ahead and get this thing wrapped up. I
Yeah.
really
Thank
appreciate
you.
you being here today. Thank you, everyone else, for listening to another episode of the Agents to Owners podcast. And we'll see you next time.